Greetings, traders. It's Tuesday, time for the Macro to Micro Power Hour. I am Samantha LaDuc, and hopefully I will be joined very shortly by Jonathan Gibbons of VigTech.io. But first, I want to do some housekeeping since he is in the room. I do this every Tuesday and Thursday. It's live, and we dig into a particular subject on Tuesdays, mostly market structure, what's going on with the sentiment, as well as optionality and macro and technical and all that good jazz. And then on Thursday, I have a special guest captain interview. I've got a very special one coming in on this Thursday. You probably have heard of her before, Denise Schul. She is a trading psychiatrist, superpower trading counselor, and her expertise helping to kind of unravel all the things that are blocking us. But for right now, I just want to again remind you that we have this crypto background carnage that has still gripping pretty much every single tweet storm I can find. And I want to start off by kind of doing some conspiracy talk first with Jonathan. So this should be fun. Jonathan, are you in the room? Yay. All right. I also want to let you know that when we are done, this will go on my YouTube channel, LaDucTrading YouTube. I also am excited that this is a Spotify, Audible, and Apple podcast. So feel free to check that out as well. You won't benefit from necessarily any charts we show, but you'll definitely hear us kind of work through this lovely sentiment. So without further ado, how are you, Jonathan?
I'm doing all right. How are you doing?
Not enough time for hair and earrings. So
Uh, that's what I got. You
I
can
know this.
stay or leave. That's that's all I got.
T-shirt, hair's up. Okay, next time. Maybe next time. I'll
That's
I'll
right.
I'll curl it for Denise. But
There you go.
yeah, I really am just in conspiracy mode here, and then I don't go here very often. This is like I only allow it on Sundays, and I don't tweet then. I just think about it. But I tweeted something earlier regarding the crypto carnage. I don't know if you
Yeah.
caught it, but I thought it was darned interesting because it wasn't the first I had heard of this. And I'm going to kind of go through this because I think it's interesting. So someone who claims to be, an insider, if you will, is going through a play-by-play of why crypto crashed. It was in the long and the short of it was to make it affordable again,
Hmm.
right? They get a whole bunch of institutions saying, "Hey, we want to buy in, but it's too expensive. Make it come down." So, and by the way, this is not the first time I've seen this. I actually had someone else send over kind of like one of those, the old form of Yahoo channels that don't exist anymore, basically saying, look alive on the 18th that we're going to have a crypto crash. So sure enough, we did on the 19th, and I was like, wait a minute. So this is someone who came in, basically you can find 2 comma popper on Twitter, and going through talking about how this, crypto crash came about for Bitcoin and the rest to allow for, uh, you know, other institutions to come in. And I know we've heard lots about China whales coming in and selling. We've also heard about China clamping down on Bitcoin. Miners, because they make up like 65% of the flow, but in fact that's actually all kind of orchestrated, was basically the MO. So I don't know if you had a chance to take a look at this, but it was one thing that had come across today. After last week, I had also seen a similar play or warning on the 18th. Now, I had already been, as you know, short this from the coin IPO just on technicals and on sentiment. But this is just kind of interesting that underneath the surface, there's a little bit more to this. And I wanted to know what you thought about this. Do you believe in it or not?
I don't know. I don't know if it's that simple.
I
I
also,
saw it. I saw it, but I didn't I didn't read. I like was jammed in a couple of different meetings today, so I saw it like come through. So I posted, and then I like briefly overviewed it. So I couldn't speak to it intelligently because I didn't read it all. But the gist effectively is it was kind of set up, and somebody took advantage of the setup to make it advantageous on themselves to either buy it at a lower price or, maybe crush the short side and buy it at a lower price. So, I don't know all the details. So you'd have to give me the full details before I could speak to whether I believed it or not. I think that, yeah, so I would say what I did look at was I kind of posted a couple tweets like last week, and then towards the weekend, it was like, look, if Bitcoin is really messing around with 50,000, and it really didn't have a good hold of that from a bid standpoint, so it would get to 40 pretty quickly, and it did, and then 40 gave way, and I thought that 40 would be where it would get to quick, and it did, because just the bid structure wasn't there. And so I got there real quick, and then it got to 40, and I said, if 40 goes, then it should probably chop inside of 30 and 40 a lot. Like it could be volatile, but it'll chop a lot, because that's a bidded zone if you just look to the left on your chart. If it gets under 30, there's something else going on. Like there's something else much heavier going on in that space. And it held 30 like on the nose and came right back to 40, 41. But it was same day. It was pretty volatile. So, I mean, it was definitely like, you could see how concentrated, without reading the whole thing, I don't know, but like how concentrated that space is with large holders versus, the small. I mean, it's a whales and minnows space, like for sure, because these bids just get, eviscerated at certain levels. Like they ride real quick. So it's like, greater fool on the way up, and it's just real fast on the way down. And it went from 40 to 30. And then the next level I have is 26. If they
24, 25.
Yeah, if they stop run underneath 30 and hold here, it could be a decent level where that would shake out where they were trying to buy. But if 26 gets tested and that goes, then you're looking, that could get ugly. So, well, I mean, I just from a market structure standpoint, so I don't have a say either way. I think it was the gist of that they were buying. Is that what the gist of that was? They wanted to push it down to buy it. Is that the effective?
Oh yeah, but it's very, very orchestrated with military precision by professionals, and how they do it, and how they pay for the media to also, the clicks, if you will, with the algos triggering on certain keywords. Oh no, it's pretty in depth. It's pretty cool. So I thought
okay, I'll check it out.
Yeah, definitely check it out. And the other thing to check out is that Bitcoin has followed a Wyckoff distribution pattern, and some have already heard about this. There is someone who spied this a few weeks ago and said, this fractal is pretty tight. And sure enough, let me just show you this. Here is the Bitcoin fractal of Wyckoff with price action overlaid with Wyckoff, which was basically intonating a fall. This was done 3 weeks before the crash down to that 29,000, basically. Actually, overshot and came right back up. But the point is, this Wyckoff is kind of interesting how it really is, whether you call it sentimentality of the psychology of crowds, or it was preordained. I don't know. Again, I have no facts to back up any of this. I just find it fascinating. I find it fascinating. So this was the Wyckoff, it basically fractal before the sell-off, and here we are. This is 28,000.
Yeah, I mean, Bitcoin's more of a pure market from a technical perspective. I think from what I've witnessed the last few years, because doesn't have as much derivative overlays, and the derivative overlays have really kind of shook up some of those fractals, or just the kind of the human cycle stuff that historically was a lot more effective from a reading standpoint, like kind of reading a chart or reading an overlay, and it's like that. This is kind of following this wave-ish pattern or what have you. That the derivatives kind of mess with that, because they draw, you get draws up and draws down significantly because of the exponential impact of the derivative. So options and, all that kind of futures, et cetera. So Bitcoin having been non-derivative, really, I mean, there's a lot of leverage in Bitcoin, so don't get me wrong, but it's not like as affected. The options market is really, in its infancy with
Well, that
Bitcoin.
was
So
actually one of the arguments was this is a major asset class. Everyone would agree it became a major asset class last year. And in the span of 2 weeks, it lost $1 trillion worth of value. So
hmm,
that was significant, but not,
yeah.
yeah. So not just it dropped, just the 42% in 14 days, but $1 trillion in value. But a lot of that was already well, not expected, but kind of presupposed high leverage, in some cases 100 to 125%, right?
Hmm,
That
yeah,
had
yeah.
been wiped out in that liquidation phase. And then there were big institutions with very large orders right below.
Hmm,
So
yeah,
that was
yeah.
basically the premise of this particular piece, but it was with all the facts and corroborating evidence of how they pay for it and how algos come in and basically how it's an orchestrated military move. But I do believe that, this is the interesting kind of um, inflection point we're at. John S., a client of mine, direct messaged me earlier saying that they're now bipartisan support. They're coming together to talk about Bitcoin. There's regulation, of course, discussions, one in particular. So in other words, this is um, U.S. Senate Financial Innovation Caucus, which is bipartisan, is coming together to talk about Bitcoin adoption in the United States. And the one that I really thought was interesting was Treasury briefs White House on crypto risks amid Bitcoin volatility. Admin does not see threat to financial market stability, but studying where safeguards may help while allowing investors to dodge coin to their heart's content. So this is one of the reasons why it fell so, not fell dramatically, rose and fell so dramatically. There's no regulation. It is the wild west. So this, to me is just it's becoming a little bit um, exhausting to kind of come up with the stable case for staying long a highly manipulated, highly volatile, and illiquid um, asset. Forget all the crypto coins, of which there are what, 52, 5,400. I don't know. They build them out of thin air every day. So I'm just kind of curious, what from all of this excitement have you kind of gleaned? Are you tired of it, or do you see this as a fabulous buying opportunity?
No, I think the thing that stuck out to me last week was the change in perspective of the kind of some of the major proponents of it to a hands-off. um some folks, no need for names or anything like that, very much are like staking their entire claim to this being the next thing, and which is totally fine. I mean, everybody's got their thing, but they were kind of like backing off. um and that was interesting to me because like um typically, like, with the volatility that you have historically in Bitcoin, I mean, it's pretty volatile from the inception. I mean, the thing goes up 7,000%, goes down 3,000%. I mean, it's and I'm exaggerating there, but it's got major drawdowns. So theoretically, you shouldn't like be too overly concerned if that is your premise. But I did see a lot of kind of like, well, look, like this kind of like hands off like approach, what I haven't seen before at all from any of these folks at any point in time previous. The second thing I saw pop up was a lot of Tether commentary again, but in the context of, well, you see, there's problems here that we all have been aware of, so it's not like we weren't aware that there were risks to this, and these are the same type of folks. And then where Tether was refuted, and I told you Tether was my big kind of fork or stake in the ground, I should say, back with the Southern District of New York Attorney General ruling that was not a big deal. We're just going to fine them. They move forward. And Tether's like one of the largest, like, supposed cash hoards in the world, behind some of the largest corporations in the world, supposedly, right? But it's not proven. So like I go to the stance
I
of
didn't
I
know.
saw some change in the stance, and then like I go to the thing from Saylor and the other guys that said they had a committee meeting about miners, and we're going to make this more eco-friendly type deal, and we're going to figure out how to resolve this, because as if the whole thing was predicated on Musk's tweet about this being not something that was eco-friendly, right? And that he wasn't going to support something that wasn't eco-friendly. So the whole sell-off kind of triggered off Tesla's, we're not taking Bitcoin anymore, but we're still doing Doji. And I got a lot of developers doing Doji. And, if you want to come help us do Doji, join the GitHub for Doji. And so it's like, I don't think, what I would say is your term, the Wild West, is probably the most applicable. This is the Wild West. And that, it's a positioning structure. So these folks are you got to look at the incentive alignment on what people are saying. And then, you see some of these people back off, these just diehard, folks that are like diehard, anything, any coin, anything, this is going to be the difference of everything, back off. That really kind of shocked me. I was like, wow. And then I see, the Fed kind of the speech yesterday, and I'll forward you in the report, that they started talking about coins, and they talked about Fed coin effectively. They didn't say that, but they, referred to a Fed coin effectively, and their commentary wasn't friendly to Bitcoin or any coins. It was actually quite opposite. Like, yeah, it's never going to happen. We're going to make sure that it never happens, and we're going to deliver the digital token, the digital coin. And that was the first time they had discussed it, and it was pretty poignant. So I think that those were the takeaways I had. Like, I don't trade the space, right? I thought Ethereum was a good play a while back. I thought that was really way overbought, and just kind of parabolic last couple of weeks. Yeah. So that was something that I didn't think was going to continue. But I think that the biggest thing to me, the biggest shock to me, was the kind of like hands off, like, wait, like, I'm not sure, because one of the things that I saw was somebody say that the biggest risk to Bitcoin getting true adoption is people trying to promote Bitcoin as like fully of everything. And it was like the complete opposite of the stance that people had on it, that Bitcoin was going to solve everything. And so that kind of, when you see folks flip their position in a narrative environment, it's kind of alarming to an extent, because it means that, like, whoa, there really is nothing hinged or hooked to anything here, and this is a wild, woolly situation. And I'm not sure that, like, I got a really hard time believing that the U.S. government is going to adopt Bitcoin. I just, it's like, maybe I'm completely wrong, and we're gonna, for the first time in human history, not have a government control of currency. I could be, maybe I'm naive, but I don't know that that's going to happen.
Well, I'm throwing up this chart on the Tether front, because I thought it was very, very revealing that literally, at 85 billion, more than 2/3 of which is Tether, reserve funds for USD linked asset-backed tokens are potentially significant money market investors and comparable to the largest prime money market funds. Now, that's really important, that sentence, because then when you just brought up the whole, Fed and Bitcoin and, bipartisan discussions and such, it is really impressive when you compare side by side the holdings among prime money market funds, corporates, and Tether. Look where Tether is.
Yeah, that's what I was saying.
We're talking the top 10.
Larger than most corporations.
That's impressive.
It's never been audited.
No, there's that. So, I just thought it was interesting. The Conspiracy Sunday, conversation that I had regarding the manipulated sell-off, with lots and lots of offers, down below, which were filled promptly, and now they're really irresponsibly long, but it proved to be very productive, right? Bitcoin bounced, Ethereum, the whole thing. But
we have to see if it. Yeah, we have to see if it. It's got to form a base and then start a new trend. And so it hasn't done that yet. So I think you got to be cognizant of this area at 30 to 45 as being really choppy. until next, I'd say that, and what I had said in my Twitter was just the next direction is just the direction. So if it chops out of that 30 to 45 and heads up, yeah, it's done. That was your base. But if it chops around that area and then breaks down, then yeah, it's a whole nother ball of wax. It's same thing either way. It's going to be pretty trending move comes out of this area. And that trending move will tell you kind of how everybody was playing it. So if it trends down, then that article is not right. They weren't looking to buy it. They were dumping it. And if it trends up and out of it, then yeah, for sure, they were looking to buy it. Right.
Well, the interesting, the conversation that I was having a little bit online also was that this is, I don't want to call it mass adoption or just the maddening of crowds. So,
what's his name said that yesterday? Schiller.
oh, he did? Okay.
Yeah, he said it. He quoted. They quoted him on. I think it was on CNBC. He had came on and said that.
Is it
Look,
the networking effect or the maddening of crowds?
Yeah, it was effectively talking about the maddening of crowds, and this isn't any longer related to interest rates or stimulus. That this is now something else. That was his quote unquote.
Oh, okay. So this is, I had, someone had responded on to a tweet that I had put out because I was like, I remain open-minded, right? So Bitcoin, whether it collapses or, goes to 5 million, the plan B price target in some future year. It's a shortage, the shortage of financial stores of value that we currently have in the market in general is causing panic buying, right? So we've seen it of late in commodities, maybe not oil and nat gas, and gold hasn't really had a reason to go parabolic, but we've seen it in lumber, we've seen it in all kinds of other commodities, right? So this shortage of financial stores of value in general, to me, is one reason why, not just the maddening of crowds, but also this network of money, this idea that Bitcoin as the network of money is scarce, loses its value as the argument with each new competitor or alternative arrives. I mean, it was interesting. They every single deficient comment, and a deficient comment, but detrimental comment to Bitcoin and cryptos has been turned into an absolute plus. I love how they spin it. And in many cases, it may be absolutely right? Like the early internet. It's just 2000 equivalent of early internet adoption, but it will be exponential. Mobile, we've talked about that, right? It's hot fire flames along with internet e-commerce buying. So these things usually take some time. This adoption rate, they're already pulling forward the future adoption rate, and hopeful again about growth and traction. So we don't really know those at maddening of crowds. Is it just this any store of value is being accumulated aggressively, but this argument that they lost a whole bunch of Bitcoin, in for lack of passwords, right? That only increases the value of it. So instead of seeing it as a negative, they see that as a scarcity argument to, support the price appreciation of Bitcoin. I can't find anyone who is a solid, and I mean even the macro turn Bitcoin bulls who say there is a negative. Every single one has been basically a selling point.
I say, yeah, on all that, like I get it. What I was going to add is Chris Cole threw out there a while back that comment about volatility transmuting into the crypto space.
Love that.
As it hadn't been in other areas. And I have two things to say about that. Number one, I think he's accurate for sure. There's definitely some reality to that transfer of volatility from space to space. And the other thing I saw was that, long-term capital management, that whole breakdown, and I've read all those stories about that in 99, and that caused pretty significant drawdown in the indexes at that time, and the Bitcoin collapse was significantly larger by orders of magnitude, and the indexes didn't even flinch, right? So didn't flinch. So I think that that kind of fosters his thesis and confirms it to an extent that you have volatility in subsectors, and in different sectors. And then the indexes themselves are liquefied. So there's limited to no volatility in the indexes. And I thought that kind of proved that point almost like exactly, because, if Bitcoin is just, you have this whole subset of like, and the same guys that were, plugging Bitcoin were also holding therapy sessions on their direct messages over the weekend, I guess. And that's volatility, right? That's prime volatility example, where you got major drawdowns, major volatility, and then the indexes experience like almost nothing, right? Relatively nothing. And I've seen no follow through into the purchasing of the Bitcoin related stocks or the crypto related stocks this week. It's just flown to, money's migrated to other areas. So it's a very interesting, it's a very interesting kind of premise that like that. I think that thesis is like spot on. And I would add to it that kind of moves. So as Chad, that's it. That's the article. That was excellent. Excellent thesis. Excellent thought.
So talk about this, because this is basically crypto as volatility buffer for excess liquidity. And I follow that, right? How much is coming in and where they're going to put it. And is the Fed going to buy more? Or is Wells Fargo going to pick up the slack because foreigners aren't? And we're talking massive amounts of liquidity coming in from, fiscal and taxes and just plain old printing. Oh my. But that was interesting. Regulation of crypto, Chris Cole says, can be seen as a second order monetary tightening tool by government to tame inflation. Correct. And I was like, huh? Oh, wait a minute. So basically, if this thesis plays out, Bitcoin crypto, as an asset class, isn't just a bad hedge on inflation. Its number one risk is inflation.
Yeah.
Yeah. So
you think about how much excess liquidity has gone into some of this stuff. Like just think about these things are created out of thin air and ended up with $150 million market cap, right? Like, in 3 or 4 days, like you can create one, throw it out there, put it on, social media. That's attracting excess liquidity. And then if that space gets claimed, what do they call it? Like the clappening as what is it? Exec summer liquidity is a great follow on Twitter for anybody that likes meme stuff. But they were talking about the breakdown of this over the weekend, and it hits everything. So if you crack it, it hits the whole space. So it's like all up or all down across the board. It's the same kind of thing with like fuel cell and SpaceX and or not SpaceX, but Virgin Galactic. All of those Momo type names were the money flows in those things have been wiped out. So we've gotten those wiped out first, and I would argue that they're the same. And then you go into the crypto stuff second, right? And so now we're kind of back to square. And then another thing he threw in there was that you got share buybacks coming back by significant exponentiality this year, which is an inverse volatility short. So it provides a static bid underneath stocks. Fascinating stuff. This is fascinating stuff when you think about it as it relates to a place where this is absorbing volatility that's not ending up in other goods. Because if it can't go into crypto, then it would end up in cars, houses, food, you name it, it would end up in the rest of the economy. Although we're seeing it in a lot of the other parts of the economy because there's so much excess. Wiping off $1 trillion in crypto when you printed 15, 14, right? Just the United States, 12, whatever it was. And then you got all the rest of it. It's like almost like part of the levers, right? To an extent, which is like, that had my wheels turning. I was like, fascinating. So
I still, it bugs me though, the fact that it gets spun as an anti-fragile financial system. That is a quote from
that's just not, I just don't, you can't say that about anything that's new, frontier, vanguard stuff. It's total it's like ultra fragile, ultra volatile, right?
Well, so, it's also
not that it's bad or that it won't play out like you said the internet earlier. It's just that's not the case. It's very fragile.
Well, to me, I would agree with you, but this it doesn't mean it's not incredibly tradable up and down.
Oh yeah, totally.
Yeehaw! And I actually have to, but the anti-fragile statement is a popular one, and it is that it doesn't break in times of stress, meaning it had those huge, drawdowns, right? The one that I had up here. Sorry, I took it off. The huge drawdowns. This is Bitcoin correction date, recovery date, days to recover, right? And this is a drawdown from high, peak to trough. And Raoul Pal was making the argument that it's a new anti-fragile financial system that doesn't break in times of stress, where ownership of assets is clear and losses are not mutualized to taxpayers. This was a big 2 weeks for crypto and for the future financial system. So we have, of course, ardent bulls that will obviously find a lot to say about this continued bid. Then we have I don't, for lack of a better word, conspiracy theory, but it doesn't feel so much like a conspiracy theory, where in fact the price is taken down to allow for institutions to come and buy at a cheaper price.
When were taxes due this year? Didn't taxes get kicked a month to
that was 17th, May 17th, and this happened, soon after.
Well, look, I mean, think about this. So I make $1 million in crypto last year, and I'm trading it, and I owe, right, 200, 300 grand, and then I just take a 85% drawdown last 2 weeks, right, on the entire pocket on leverage. Tax bill still due.
Yeah.
Right, and they came out with all those tax rules. And these are the types of things that I'm telling these are like, make sure you remember it, right? Because you can have a drawdown, but you got a tax bill. Yeah, that's a life lesson. That's a life lesson, right? Like they're not going to let that one go.
Yeah, we talked about the tax implications.
The government, again, with the Fed, I'm more along the lines of like, we're not, I think that the smart contract on this is the thing of the future. It's a lot like the internet. It solves so many inefficiencies in the business world, so many inefficiencies in so many industries. So I'm all about that. But some of these coins and some of this excess, it's not good for business, for the government control of the currency. So like it was like the timing was really interesting.
I have to make a pitch for this webinar that I did with Scott Melker, Wolf of All Streets, last Thursday. We talked about the tax implications, and he's got friends who made hundreds of thousands of dollars, trading the coins and Bitcoin, and the tax implications, because they didn't realize that every transaction is a taxable event, and talks about all of that and the conversion process. So that's definitely what I recommend if anyone's interested in really understand, okay, so how are active traders, because he had 11,000 taxable transactions last year. So how are active traders really doing it in the weeds, and then how are they hedging potentially, and what's their conviction long term? He definitely did address that. But the other argument on the macro side of expecting a US dollar collapse, it just bugs me. So, and I mean, Raoul used to be a very ardent dollar bull, and Bitcoin is the antithesis of that argument, but that's because there are other reasons, right? It's not going to go away per se, but there are some who are really strongly dollar bearish for all kinds of good reasons. I get it. But I still don't think it is reason enough to be a Bitcoin bull, and in fact it kind of fuels their anger.
It's like a repackaged gold bug. That's all when I hear that, I'm like, oh my God, I'm listening to guys from early 2010.
The young,
it's like same thing. It's the same thing. It's the same package story, right? And, like, it's the dollar and the government. It's like, well, I heard those guys are saying that like 10 years ago. And then if you look back in history, people have been saying that for a while, and they always try to give you something else for that. So it's got to be a better use. That's just like I call it a lazy use. That's a lazy use case, right?
Well, I agree. I mean, but the point is, this is still an argument you hear often of the dollar collapse, and I'm just kind of like going
impractical.
It was impractical. I was trying to look through this weekend, going, okay, so how many of those retail, highly levered retail players have just been taken out? Probably a whole bunch, because we saw almost 800,000 accounts and 8.6 billion, according to Binance, were liquidated. So that's that. But there was no other daisy chain of collateral damage in by
No, small
institutions.
lots. Yeah, small lots.
They were exactly, so there was no, daisy chain of liquidation by institutions apparently. But I still, the value of networking is very hard to measure. That's actually a Bob Metcalf saying of
Hmm.
Metcalf's law. That's another argument that the Bitcoin bulls use repeatedly. This adoption, right? This no, is adoption real? Maddening of crowds. Networking effect, but the value is very hard to measure. Um, I don't know. It just, whatever I was reading or looking at this weekend in this realm of trying to come up with basically not just price targets but also reasons to be bullish or bearish, right? So this was a really awesome call. I mean, coin IPO on April 14th. And I'm telling clients, I think this is actually going to be a short, and we played it extremely well for a solid month. But this surprised me, right? This wipeout and then quick reversion back. I wanted to understand how could that have come so quickly, right? In a New York minute, bids are already sitting here. So now what's happening? The same people are saying, "Oh yeah, we're going to put bids down here, around 25,000." And I saw a big whale, China, big whale has a very large order down at 21,880. So they're putting orders down just in case it has a flash crash. I mean, okay, so these are diehard bulls. I get it,
But
but
if it's like, yeah, but if it's not a hidden bid, right? Like, I don't know if you guys use platforms where you can hide your bid. Better hide your bid, because like all the hunting algorithms hunt the bids, literally like the Matrix, right? Where they're like
yep.
looking for those, like sentinels look for like Neo, right? Like they literally can see them heat mapped in their code, and they're going to get them. And that's why I think, like, if that bid's at 18.8, they'll take that, right? Bounce it and then blow it out, right? Because that's like easy money to a HFT. Like, I can go tag it, bag it, bring it up, have you probably double it and turn it over. And so I think that the levels for me, like if you're just looking at your chart right here, are really important to the narrative too, because the narrative is busted. And when you saw all the folks break narrative line, that means the narrative's busted. So, it needs a new narrative. And you've got these levels that are really dicey right here too, between 30 and 40, right? It's got to stay in there and hold in there and head higher. If it goes to 26, that's a tough hold. Like the real hold is at 18.8. But if it gets into 18, it's going to test. Like, I don't know if you guys follow James Jude, Jimmy Jude, but he's a ex mercantile trader. He's great, and he throws around the auction theory stuff all the time. So when you see that 16,270, right? If it trades at it, it'll visit it, right? So it doesn't mean it's going back to 16,270 on that candle. And you see the 29.9,
Yep.
right? If it trades at it, it'll revisit it easily, because that
Yeah,
means
yeah,
there's juice down there to get cleaned up. So I think like 30,000, that area right there is got to hold, right, for this not to get into the 20, because 26 just doesn't have a lot. It just doesn't have a lot of. It doesn't have a lot of auction right there. It's gonna, and that doesn't mean this thing can't turn back up from 16 and go back higher. It's just these are auction. Like, I'm just strictly talking market structure right here,
correct.
and then
Yep.
the narratives all come behind that. Like that 16,270 to 20,000, that's a tradable area, right? And then that 30 to 40,000 is a tradable area, and you can just look right to the left and see it. And you don't have volume profile on here, but the volume profile kind of matches that. There's not a lot of volume profile between 20 and 30. And so there's just not a lot of tradable actions. It's going to explore. That's what they refer to as explore those areas. And it could get really, really volatile on that. And that's the thing with this, where it was a one-sided trade. So I think that the narrative is really, really at risk, which could be for a bunch of different things. And you need that narrative to carry it forward in the retail complex. And the institutional complex, now it's going to come down to levels. You'll see, kind of check out at 29, 29 probably, you know, that might take some risk at 26. And then I'm going to check out. If that breaks, then I'll check out and I'll try it again at 20. So, I mean, yeah, I'm more along the sides of like, since I don't have any really stake in the game of looking at this from a holding standpoint or from a narrative standpoint, because I'm not really sure what the real case is for this. As a payment thing, it's real inefficient, and it's more of a transfer of value or store of value, I guess. But and I think that's where I would look. That's all I'm looking at it as, and it's just levels. And if the levels move, then you got to move and reassess it. And that's why I said 30 to 40. I literally posted 30 to 40. It's going to trade in that range, and it's going to be juky. And it did. It hit 30, it came right back to 40, and it's been chopping around in there. It gets to 42, comes back in there. It's everybody, buyers and sellers, deciding is it going to hold? Is there enough momentum? You'll see a lot of action come over. If it gets over 45 and starts to turn up, you'll see orders come in because, you know, that's safer money bet. But if it gets underneath 30, I think your 26 is a good tag. That's a tough hold though, I think, just from a market structure standpoint.
Yeah. Well, the whole thing, I go back to this whole arena, which is looking at virtual reality coins and virtual reality and the gamification of it all, and it's just the perfect storm for this mania. And what would break it? I mean, I love, you know, John S., who's a client who wrote in member chat that he was, you know, up 5%, but because he's been in it for a while, his portfolio holdings were up 25%, right? I mean, like his gains, they were doing great. And I asked him, I said, so are you uber bullish? And he's like, no, I think it's, you know, a total Ponzi. I can't even grasp the use case for it outside of replacing wire transfers or for large scale companies to transfer funds. But, you know, and it's a dangerous asset to own, and one I have no desire to own longer than a few years whatsoever, but I will trade it. I think it's a great trading vehicle. So that, like you said, is kind of like a tech play of sorts, and this momentum play. What's in? It's in. So what would break it? What's the number one thing Bitcoin would basically, you know, fall under the weight of?
You know, it's 24/7, 365 with no circuit breakers. So the way that the exchanges get around human psychology now, and the Fed, it is strategic. I firmly believe that at this point, is to institute stoppages. And so futures have a stoppage, in the ES futures and the YM futures and the Russell futures and the silver futures. Everything's got a breaker, and those breakers are meant to calm it down. And Bitcoin has no breakers. And I made a joke about it, like, where's the circuit breaker?
Neither do bonds, right? By the way.
Yeah. So like the where's the circuit breaker? And then, you know, everybody was like, oh, there's not a circuit breaker. I was like, I know there's not. So that's my point, is that, you know, it can get, all it takes is a push of capitulation, right? So it isn't even something that's necessary. Like, you know, we find a lot of reasons why it would break from a narrative perspective, but effectively on the auction, all it takes is a push to steamroll the order flow, and the order flow eats everything underneath it, and there's no stopping it. And that's why I say, like, you know, that's why before it's gone way up and come all the way back, I don't think anything different this time. And to just Tangen's point, you know, I've talked to him several times, it doesn't take away from the use case of these smart contracts or the whole complex, that the price action can revisit exactly where it came from and then still go higher after that, base and go higher. It wouldn't take anything away from that. But from the sheer structure that there is no stoppage to this, if it gets turned over to where it gets into the bid and everybody's sitting there like this, right? And then it's down like back to 10 and it round trip from 60, right? And everybody's like this, and they're like, yo, what just happened? And all that happened was, it was just the levels. And, you know, basically once it starts sniffing, like if they sniff, if the whales sniff blood, right? Because you got to understand on the short side, it's so much faster money, right? Alongside, it can be quick, but it'll usually come back. But on the short side, it's like it's like an elevator, like escalator up, elevator down. You can be making money, like you just saw. This thing peeled off
Well,
4 or 5 months in like 4 or 5 days, and that's what happens.
yeah.
And then you get into these levels, and then shove that thing over again. And I think if they get into 20s, right, you could start to see
I went looking for it.
some institutions go, whoa, we because they're the ones that would hold a bid, and they may have like a no-go zone, like you cannot buy that there, because they know these levels. You can try it again at 18, but you don't bring that back into my office until it's there.
Well,
and then we're going to look at it there. Then so order flow and order sizing, especially with people with stuff sitting out there in the market,
literally
like that,
sitting out
like
there.
it's just sitting out there, and I'm just looking at it. And if I know that, I can steamroll that if I have enough powder, right? Like Soros type stuff. So like, I think that it gets really more, what everybody's in right now is the narrative broke. So there's no narrative, like Elon is like, look, I'm not taking Bitcoin. It's got the mining ecological problems, right? Okay, bro. Like you just took it and put it on your balance sheet. So that's nonsense. Like you come down here. So did that push it over? No, it was already thinning out. It couldn't make a higher play for weeks, months on hand. It was thinning out, and then it got pushed over. And when it got pushed over, the level broke, and the level just washed it right out. And then you get in here where we're sitting now, and that's what I said to somebody the other day. The trending move that comes out of 30 to 40 is everything. If it trends down, you're going to see 10. And if it trends up, you could keep moving and just keep on cooking. But this is no longer a narrative conversation, in my opinion, for like driving it or crushing it. I think it's now in the sizable players' hands, which, dude, that's dangerous. This is not, the sharks. That's why I call them the great white sharks in the app and everything else. The sharks, you're in the deep water, you're bleeding, and they smell you, and they smell everybody, and they're there now. And these are the most predatory creatures in the ocean, and they have no sympathy. And then no sympathy back in the Fed's terrified of these people. Like, and you can't change that creature. That's not a whale. That's a shark, right? It's a great white. They eat things. And like when you look at back in March last year, the circuit breakers were the saving grace, where they could access this stuff, stop it. You were getting intraday moves of 4 or 5%. They were talking about limiting the circuit breaker action to get the intraday moves to be quelled, right? To move them from 7, right, to 5 to 3. They were throwing stuff out there to where it's like, look, because volatility is the enemy of safety. And now Bitcoin is just living in a great white shark volatility environment. And like, you've got it on 10 times leverage. So it's a lesson, right, that people hopefully have learned most of what they're going to learn here. But I suffice to say, it could very easily revisit 10. And if it revisits 10, there's no reason it can't revisit 3,600. And I said that the other day. I don't know that that's going to be what happens, but those are the markers where those sharks will kill everybody in the water, and then they'll laugh and go chalk it up, and they'll do that in weeks, and they make just monstrosities of money in weeks. And it's just, saying that's it. So I saw that thing saying, killed it, Anon killed it, right? And that's the point. I would consider him in Wall Street Jesus, those types of guys. They know what's going on. And so, like, it's just, I don't know. That's my take on it. It's structural. It's structural. And that he made $1 million, right? What about multiplying that by a guy who has leverage on $1 billion, 5 or 10? That's the great white that'll kill the entire market. And he can move it over the edge, right? And drop it. Like, and then just eat everything on the way down. And that's how this stuff works. And that's why the Fed fights the volatility as best they can. And that's why these things go vertical, down, right? Just straight down. And
I'm still on. I mean, I like Just Hanging. He has a comment. You don't have to make a binary judgment. Every bubble that ever was a little too much short term exuberance about some technology that did prove long term significance. This is true. It happened with railroads, radio. Yeah, you live through
Yeah.
it, and of course with Raoul, and Raoul will be probably right in the long term. But it is interesting because right now we have short term knowledge of very little, the creation thereof, the ownership thereof, the holdings. In other words, mining, they say, is 65% of Bitcoin done in China, and the China whales are outsized, but they're expected to also be the largest ones in China. So there's a bit of manipulation here. I mean, some people are still going to play the game. Some are going to just sit out because they're afraid of being played. They want to play a game they can win. And that's different. I mean, trading it is very different than having this construct of, religious fervor for this. And part of that religious fervor, and I don't call it religion, but it's kind of replacing it, is this virtual reality of everything. Just it's fascinating, the possibilities. And I don't want to talk about NFT because I know that there is, again, this rabid fan base, and I don't even understand the implications. So I really tried. I listened to a podcast. I went through it and I said,
I'm with you. Yeah.
and I went really back to my farm girl roots, and I said, who's going to do the things if we're all creating, yield, this chase for yield, virtual chase for yield, and virtual reality of real estate, and virtual this, and virtual, currency, and virtual that. Who's actually going to get any shit done? I just, I don't know.
Very, very fair question.
So
Great question.
that is just the concern that I have when I look at this kind of excitement. Going, okay, so everybody's going to be virtual. That's not really possible, as it relates to,
Yeah, I'm with you.
pulling this
I think
future forward. It just seems,
well. I read a statistic that was in an R&D report that we got for our own research. So this is sophisticated, like paid for stuff, right? It's not like just something off the wall. And 3 years of technological advancements were pulled into 9 months.
100%. Yep.
3 years. And so some of the stuff's gotten a little carried away to kind of the farce, farce, not the far side, but the farce side, right? Like it's carried away. And so it comes back to reality to an extent. Now, some of the stuff has not come back to reality and is not going to come back to reality. Like some of the changes in the smart contract, the efficiencies that are coming in the business, software is eating everything. That is not going to change. So, Bitcoin's role in some of that, or Ethereum's role in some of that, like how that structured, right, is TBD, but that's the play, right? But at this point in time, some of this stuff is just, it's carried away. And how far can it come back? Now it's susceptible to these market structures and these forces. That's and it's almost like a natural, it's nature, right? To an extent, like something gets exuberant and carried away, and then it gets eaten, right? Because it just lost all sense of reality, right? And you would believe that maybe housing is getting carried away or whatever. I'm not so sure that these are the same things. Like I think that we got carried away in these spaces, but there's a super housing shortage, and the Fed is dead set on keeping interest rates low, right? So you're going to continue to see that probably flatline, in my opinion, right? It just takes on a different deal. You've got inflation, which is a different ball of wax than this. So I think that you are actually starting to see some of this stuff shake out a little bit. And I think you're spot on, right? You were talking about the comment about Cathie Wood, and that's the carried away, in my opinion. Like that strategy was a momentum strategy, and it wasn't there was nothing glitchy or broken about it. When it peaked, they doubled down the same strategy. So it was a feature, it wasn't a bug that has eaten that So they sold winners to buy losers, right? And then added leverage on the losers. The same thing they were doing on the other side. So there was nothing, and there were 75% of the holdings were all the same across all 5 major ETFs. So it's effectively one giant ETF that was buying the same stuff, but then when it got hit, they'll use the same formula. So it was, it's just nature, right? And these things are shaken out of the tree. I just don't know how the rest of it is impact. I don't, you saw no drawdown in the market, like none,
Yeah.
like nothing. And volatility is muted, and it's about to break down again. And then if that, you got the share buyback thing coming in on top of it. And I could tell you there's so much liquidity and so much of the excess sidelines for new stuff that it's like these are pockets of volatility now. It's what it feels like, which are, to your point earlier, super tradable, very profitable pockets, right? Of subsectors that can be very, very tradable, as opposed to the entire market structure, like the total market, right? Like the S&P or the Dow, right? Like those things, they're setting those things up, like theoretically, like high yield to be more like, kind of retirement vehicles that are backed, versus these where they let these things kind of run roughshod Wild West, right? These are the tradable environments nowadays. So I that's kind of my takeaway on it. It's like, this is seen like, oh, okay, this is the real environment where you can actively trade now. The indexes, are dip buying vehicles, so long as the volatility is muted, is rotational, like we've said. So I think yeah, I'm done, but like that's my take on the whole thing, is that it really is now at the hands of the great whites in the crypto space, and they got to be on alert that that if they want to be kind of recede and go back into where they're done and they've eaten all they want to eat, then the thing can continue, but it may not be done, right? For sure.
Well, I like, on one hand, I'm not surprised. This is the great leveler. In other words, the penny stock mania that has been dismissed for, every time it emerges right before a big volatility event in the market, actually ended up being very profitable for those who chased pot stocks, for example, right? Became a narrative that became, this movement that's not going away. EVs, SPACs, it's supposed to level the playing field with retail coming in and having direct access to IPOs, for example, on the Robinhood platform. Even children are allowed potentially to come in. The point is, I understand that this is democratization to a degree, but it still comes down to, when I see this type of tweet that I sent out after the conversations that I had this weekend, with kind of like that underbelly of the manipulation because of market structure, how easy it is to just pull the rug, let it drop, right? And then those bids that have already been placed there strategically get filled, and the puppy, now is up 50%, right? So
Yeah.
not only are they back in, but they're profitable from, the first hour. It really, when the next perfect storm hits crypto, you'll remember that it's perfect because it's engineered with military precision by professionals. And it's just too perfect. So, priced for me is a game. And it's, for some, they're trading huge size. 50% of their portfolio is in Bitcoin, Ethereum, cryptos, and the like, because they believe in this revolution. GameStop, AMC, BlackBerry, Nokia. I don't even know what the meme stocks are anymore. They believe it is, going to give it to the Wall Street sharks. The sharks, to me, are still not only alive and well, they're in a feeding frenzy, and retail doesn't know they're being played.
Yeah, I mean, I think people are getting more involved in the market on a mass scale, because of just the accessibility to it. I've said this a few times, I think, in the last like 2 months, 3 months, and I think that provides more liquidity. So like, when you look at like India, and they have, I want to say 600 million middle class people last time I looked, something to that effect. And then China has, 300 and something million middle class coming up, and a lot of that Central Asia, East Asia growth and population is coming online with the internet. Plus, and you look at the United States, that's like larger than the size of the population, right, of the United States. So like you got all these other countries coming in. People are trading in the markets. People like the US markets because they're most secure. You have a lot of people in Europe of the Gen Z and millennial age that are coming into market. So there's liquidity coming into the market. So like the markets are just dynamically changing. And
and the folks that are coming in, I think, I mean, I'm not just talking about anyone who wants to come in and buy Dogecoin for pennies. I'm talking about the gamification market and the Gen Z and the millennials.
Well, look at
their stuff doesn't stink. I mean, it's just it's confidence. It's also cockiness. They don't see any danger.
Well, some of this stuff is like age old adages revisited in a new allegory, right? So like, that's why I say I use the gold bug thing, because gold bug conversations were the same 10 years ago as the crypto conversation is today from some of these folks. It's like, it's an anti-US dollar. Okay, whatever.
It's anti-what?
US dollar deal, right? So it's like, a US dollar hedge or a US whatever. So like, that's the same kind of.
Wait a minute. The conspiracy side of that, and I say because there's no proof, is that it's actually really driven by China to convert their Bitcoin into dollars to buy, or into gold and land and dollars.
Well, like, so whatever that is as a result, whether that is or isn't, I'm not discussing, I'm not refuting or kind of getting into that part of it. I'm just saying, like, these are kind of stories that we revisit. And so, we had the same thing with, gold kind of back 10, 12, 15 years ago. Now we're having it with the Bitcoin. It's the same kind of, it's my populist movement of, not rebellion, but like, this is how it should be, right? It should be this way. And I think that prior to gold, you had the same kind of conversation in something else. And prior to that, it's something else. So I think it's an age thing. These people are coming in the market. I would take a step back from that and say the sheer volume of people getting into the markets is underestimated by everybody in the markets, because you think about how many people are at their beginning to earn age where they're earning a real career living and they have excess capital to put to work, and they're putting it not in banks because they'd rather bank with Apple than they would with Bank of America. If they're banking with Robinhood, Robinhood says, I'm going to get access to IPOs. Okay, great. It's the securitization change where everybody's being able to invest in more things. I think that's coming, right, in droves. I think it's going to be huge. And I think that the sheer volume of people participating in markets is going to blow people's minds across the world in the next 10 years. And I think that plays a lot into, this comes down, but then there's buyers in, and where's all this liquidity coming from? It's people working and earning, and the middle class is growing across the world. And I think that is something I just don't hear a lot about. And I think that I don't know why, because, there's a lot of access to desire to be in US markets. And then these other markets are beginning to grow, and the sheer population sizes are a huge thing. That are just, I mean, those are the folks that have it in their hand. And this is a truly augmented generation. So I don't believe that. I think that they are brave and bold, and they're going to succeed and fail. And I support both sides of it. I'd rather they succeed more than fail. But the actual size of this, right, is something that I think is wildly underestimated as it relates to liquidity. And it's not a liquidity in a name, and they're not going to move or mess with the great whites in a name, because the great whites can move names, right? Those sharks can move names like we're talking about. But overall, massive liquidity. And as people, get burnt with crypto and then start looking for the same thing, they're still looking to their phone, and they're still going to end up in something. And that might be, in stocks, right? Versus just straight crypto. Right. And that's liquidity. And so that's my kind of culminating thought on that is like, I think that there's such an underestimation on the sheer size of this whole thing and what that could potentially mean for buoying, like, public markets to an extent, right? That this is just, it's a lot of liquidity across the world. And as one person washes out, another person comes in, right? It's like Robinhood with GameStop. Everybody's like, this is gonna wipe them out, right? They moved down on the Apple Store. They've added millions and millions of users since then,
But I
right?
still, but this is when I see something like Tether with half their assets in commercial paper puts them in the top 10 prime broker list. It's
Mhm.
already there.
Yeah. Well, the U.S. government not gonna, they got to think through that, right? Like, so it's like, I'm gonna blow this out and blow all these people out the tailpipe. I know Tether probably got some skeletons or what have you. It becomes an issue of too big to fail.
Mhm.
So, where you really can't take that out back because it's got other ramifications that are more systemic, that you got to think through. So I think that is probably a big play into that. That's why like, you know, it, I watched that reaction from a game theory perspective of the Southern District of New York Attorney General, right? Were they going to really deal with this way, or are they going to deal with this secondary way? And it seems like they've dealt with it the secondary way, which is a little bit more old school, right?
Yeah.
Like baptism type stuff versus like shutting it off. I think it would instigate too much fervor than, you know lessons learned on the law side.
Well, I think it's very, very telling anyway, the heated arguments, both side. And I like to just weigh it all out, lawyer the trade, if you will, bullish and bearish. And I know folks that have made just an enormous amount of money being, macro devoted. Others who have just traded their butts off and made a whole bunch of money, and it's all good fun. Until we find out maybe it isn't, so natural or organic, the buying and selling, but it is actually a very manipulated, trading structure, and that frustrates me. But I will go back to the threat. If it is a macro, very much so, kind of close that out. Is this Chris Cole tweet that I did forward? Bitcoin is a shadow monetary tool, and it's helped the government by serving as a volatility buffer for the middle class, so money devaluation flows into purely speculative asset and less into home prices or other goods. Obviously, that was back in March, and we've seen that it has definitely flown, into home prices. They can't get control of it. It's out of its mind in certain sections of the world, but it is definitely a global phenomenon right now. So if this is true, if this thesis plays out, Bitcoin crypto isn't just a bad hedge on inflation. Its number one risk is inflation. That's something to keep an eye out for. And then anyone who's interested in this thread, and I have seen something similar to this, which was on the 18th before the 19th crash, which was literally warning that there was going to be a flash crash the next day. It literally came true. So when I saw this one a few days later, I'm like, maybe there is something more to kind of look at in regards to that price action. But for right now, the crypto Carnage was quickly bought, and they're placing their bets even lower. In other words, that 21,880 big whale, and lots of others who expect this to happen on, I guess, again, the lows take it out potentially down to that 24, 25,000. I will also mention that MicroStrategy, their average cost, because they started early, right? And so their balance sheet started to balloon, had lots of profits. And, before Tesla came in and mentioned, Tesla has mark-to-market losses, but MSTR, their break even is 24,000. So wouldn't surprise me if it heads down there first.
Oh yeah, totally
We'll
agree.
see. We'll
Yeah.
see. And yes, Bitcoin crashes. There was a small rotation into growth. I think there's going to be a bigger one right now. I'm actually seeing some Nasdaq bullish signs, despite a need for relief. It would
Hmm.
seem we don't have one, and we're just everything gets bought. Bitcoin crash, Archegos crash. That's it. That's all there's to say about that. So.
I think that's a really good point that she brought up there about the rotation into growth stocks. Like, those are the names that like are consistently traded in the apps, and people, those are pretty beaten down. And I thought I pointed out a few of those were showing optionality changes about
Yep.
2 weeks ago. And then the security volume and money flows were starting to trend up. And IWM is still sitting at that it never broke down.
Nope.
It's not broke out, but
Nope.
it never broke down.
Yeah.
And so it very well could take on another leg higher.
Neutral is the new bullish.
Yep.
I go
Yep.
over that my
We'll
trading
see.
room every day. We'll see.
Yep.
All right. Well, to next Tuesday. In the meantime, Thursday, Diane Scholl. Tell me, how do you know her? Because you were excited when you saw that I announced that she was going to be here on Thursday.
So I have so everybody knows that's the lady that the Wendy character in Billions was based off of. So if you guys watch the show Billions, Denise is the one who was and there's been a back and forth about the between her and the creators of that show about the ownership rights to that. But I've read all her work and studied it.
Awesome.
Many, like, for the last several years. And I think that I think she's a must follow, a must read. And then what really is the gist of what she talks about is the psychology that we all have as risk takers. And having been a startup person multiple times, traded, taking big risks is like almost a daily deal in my life. And I am a huge proponent of self-reflection, that kind of stuff, as it relates to what needs to alter, what needs to change. She digs into these types of things in a way that makes you a lot better at what you're doing. And this isn't a plug for the show or anything like that. I think this is a huge plug for you, for getting her on the show, for everything that you guys are doing.
Well, I want to explore women in trading and finance, and how
she's
how to tap into that
wealth of everybody needs,
tough to get.
So like the trading mental side, is probably like 80% of what transpires, and then 20% of it is levels, it's flow, it's all that, but 80% of it is truly mental. And so is like big risk taking in life. And I think that I've never in my life come across anything better than what she's produced as it relates to the mental side of it, which is why everybody was really attracted to the character Wendy Rhodes in Billions and what they were doing with that performance coach type stuff. And then the athletes really use it. I know a lot of professional golfers, professional basketball players, baseball players, a lot of these folks that are precision inch, millimeter difference type decision making. This stuff plays. And understanding your emotions as it relates to what's transpiring is so huge in life, and where those things come from. I cannot speak highly enough about her.
Oh, that's awesome. Thank you. Well,
what she does.
Well, I'm very much looking forward to Denise Scholl on Thursday, and thank you very much for that perspective. Yeah. Big fan you
awesome
are.
Awesome for you to get that, and for this conversation for you guys, a big win. And I hope that becomes something that is regular. When I first started doing this with you, she was the first person I thought of to reach out to.
That's cool. That's all right. Well, I'm looking forward to it. So anyway, come back on Thursday. And in the meantime, this will be uploaded to my YouTube channel, LaDuc Trading. You'll see it down here under Macro to Micro Power Hour. If you're more time, take a listen to the Scott Melker interview that we did on Thursday. And then Denise will be on this coming Thursday. You can sign up here, but I'm going to tweet that out, I think, this afternoon as well. So thanks again,
I already saved my spot.
All right, super. Thank you so much, Jonathan. Have a great week, and thank you again for attending. Again,
thanks,
it's on
everybody.
Spotify, Audible, Apple, and YouTube. Cheers.
All right.
Bye.
Take care, everybody. Bye.